Be Wealthy and Smart, episode 1077.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the Tesla split deadline, which is today, if you want to get the 3-for-1 split, and the Inflation Reduction Act and what that means for electric vehicles. So today is the stockholder of record day, August 17th, and everyone who owns Tesla stock on August 17th will get a dividend of 2 new shares for each one that you hold after the close of trading on August 24th. So the date of record is today. You have to own the Tesla shares by the market close today, and then the shares will show up at the new split adjusted price on August 25th. Tesla stock closed yesterday at about $919 a share, which is roughly down 15% from where it started at the beginning of the year. But it's strongly rebounded from its lows, which hit about $640 at the end of May. Now, it's known that Tesla is a very highly shorted stock, and it has a lot of volatility, so it may not be right for every investor. But if you like the electric vehicle space, you may find a reason for Tesla in your portfolio. Interestingly, about 46% of Tesla shares are held by non-institutional investors. Institutional investors are mutual funds or hedge funds that pay people to manage money for other investors. One of the reasons why it's not as widely owned as, say, an Alphabet or an Amazon or a Microsoft, which has 75% or greater institutional ownership in each one of those names, is because of what we talked about in the last podcast I did about Tesla, which is that it's had some issue with the quality of its bonds. But with the upgraded rating it's about to get, a lot of people feel that will allow more institutional ownership to come into Tesla, which could be a reason why we might see Tesla's stock price go up. Now, what happened yesterday was the Biden administration signed the Inflation Reduction Act, which will allow about 20 models of electric vehicles to still qualify for electric vehicle tax credits of up to $7,500 through the end of 2022. The law Biden signed yesterday immediately ends credits for about 70% of the 72 models that were previously eligible, said the Alliance for Automotive Innovation, an industry trade group. To qualify under the Inflation Reduction Act, the electric vehicles must now be assembled in North America. The currently eligible vehicles are 2022 models of electric vehicles or plug-in hybrids, and I'm going to read to you all of the name brands that are eligible under the Act. As vehicle manufacturers continue to submit the applicable vehicle identification information to the relevant government agencies, this list will be updated as more information becomes available. And some manufacturers that have vehicles assembled in North America have reached a cap of 200,000 electric vehicle credits used, and are therefore not currently eligible for the Clean Vehicle Credit. But here are the electric vehicles that are assembled in North America that do qualify for the credit. And by the way, these are all model year 2022. The Audi Q5, the BMW 3 Series plug-in, the BMW X5, the Chrysler Pacifica PHEV, the Ford Escape PHEV, the Ford F-Series, Ford Mustang Mach-E, Ford Transit Van, Jeep Grand Cherokee PHEV, Jeep Wrangler PHEV, Lincoln Aviator PHEV, Lincoln Corsair plug-in, Lucid Air, Nissan Leaf, Rivian EDV, Rivian R1S, Rivian R1T, and Volvo S60. Now, those are all eligible in 2022, and then in 2023, The BMW 3 Series plug-in is available for credit. The Mercedes EQS and the Nissan Leaf will all qualify in 2023. Now, on all of the Teslas, it says the manufacturer's sales cap has already been met, so it doesn't look like the Model 3 or the S or the X or the Y will qualify. So again, the ones that I read on the list will qualify for electric vehicle tax credits of up to $7,500 through the end of 2022 and a few into 2023. I will put a link to this article in the show notes so you have the list of all of the cars that qualify. So although we've seen Tesla rally 50% from its May bottom, it's still very volatile. But I think that's good because the shares are currently about 26% below their all-time intraday high of $1,243, which was on November 4th. So you're buying a dip here with Tesla. In spite of the news of the 3-for-1 stock split, it didn't run up hugely like it did last time when it ran up about 80% with the 5-to-1 split that happened before. Of course, we all know that Elon Musk is involved in a dispute with Twitter, which has caused him to sell some shares. It's actually been a total of $6.9 billion worth of Tesla stock that he has sold in order to accumulate cash ahead of a trial on the Twitter issue. But nonetheless, this is Tesla's second share split in less than 2 years. The last time the company executed a similar move was in 2020, which was a 5-for-1 stock split that led to a 60% surge in the share price from the day of the announcement to the execution date. So again, to participate in the split, you need to own the shares by the close of the market today, August 17th. And then you'll see the shares trade after the split adjusted price on August 25th. The one thing that we've been expecting for a long time, since 2017 to be exact, when it was announced, is a Tesla semi-truck. Well, it's finally about to be released. According to Elon Musk, the company is now looking to produce and begin delivering the semi-trucks before the end of the year, and it's going to equip the fleet with a 500-mile range. He also said the long-awaited Cybertruck will finally be available to customers in 2023, although there's no specific date of release for that truck. Interestingly, there are already orders in for this semi-truck, and one of the biggest orders came from PepsiCo, who wants to be one of the first to put the truck in use. Back in 2017, it purchased 100 of them. So finally actually being able to deliver on the semi-truck is a new product line and is something that's going to bring additional revenues to Tesla. So even though Tesla isn't qualifying under the new Inflation Reduction Act, there are other things going on, such as potential for institutional ownership to increase and the semi-truck and the Cybertruck coming out in 2023 that are very good news for Tesla. But nonetheless, do your own research, not financial advice. Do your homework to see if Tesla is something that fits into your long-term portfolio. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available so you never miss one of them. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.